Most people don't have a money problem. They have a thinking problem. They chase income, not assets. They celebrate revenue, not profit. And then they wonder why, after years of grinding, there's nothing left in the bank. Here's the truth. Money doesn't reward effort. It rewards discipline. It flows to people who treat every dollar like an employee, not a souvenir. If your money isn't working, it's leaving. There's no middle ground. You say you want to be wealthy? Then stop thinking like a consumer. Consumers spend first and hope something's left. Investors get paid first and only then decide what deserves their capital, because at the end of the day, this isn't about hustle. It's about control. And if you don't control your money, you will never control your future. If I spend first and save what's left, I guarantee I'll always be behind. That behavior locks me into a cycle where income comes in and immediately disappears, leaving no capital to build anything meaningful. The effect is predictable. I work harder every year, but my financial position barely moves. On the other hand, when I take profit first, I force discipline into my system. I remove emotion from the equation and turn money into a controlled resource. That single shift changes everything because it creates a foundation of capital. And capital is the only thing that produces more capital. Every dollar I keep becomes a tool. Every dollar I spend without thinking becomes a lost opportunity. That's the cause and effect most people ignore. They focus on earning more, but they never control what they keep. If I don't control what I keep, I'll never have enough to invest. And if I never invest, I'll always trade time for money. That's a dead end. I think like an owner, not a consumer. An owner pays himself first because he understands that the business exists to generate profit, not to fund lifestyle inflation. If my income increases and my spending rises with it, I've gained nothing. I've just upgraded my expenses. But if my income increases and I lock in a higher percentage of profit, I've strengthened my position. Now I have capital to deploy. And deployment is where wealth is built. I don't just sit on cash, I make money work. But I don't throw it around blindly either. I evaluate risk before I chase reward. I ask simple questions. Does this protect my capital? Does it generate cash flow? And does it have the potential to grow over time? If the answer is no, I don't move. Discipline is not about doing more. It's about doing less, but doing it better. Poor financial habits destroy wealth quietly. Small, repeated decisions like unnecessary spending, ignoring margins, and chasing short-term satisfaction slowly drain resources. The damage compounds. No capital means no investment. No investment means no growth. And years later, the outcome shows up as financial stress and limited options. Disciplined habits do the opposite. When I consistently take profit first, I build reserves. Those reserves become investments. Those investments produce returns. Those returns get reinvested. That's compounding in action. It's not dramatic, but it's powerful. Over time, the gap between disciplined behavior and careless behavior becomes massive. I focus on assets that pay me. Cash flow is the priority because it gives me control and flexibility. If an asset does not generate income or appreciate with strong fundamentals, I question why I own it. I don't collect liabilities disguised as rewards. I build systems that produce income whether I'm working or not. That's how I break the cycle of earning and spending. At the end of the day, this comes down to control and accountability. No one is coming to fix poor financial discipline. If I don't create a system that forces profit, I will default to spending. If I default to spending, I stay stuck. So I make the decision up front. I take profit first. I protect it. I deploy it with intention. That's how I move from working for money to making money work for me. Idle money disappears. Deployed money compounds. I treat every dollar I earn as capital with a purpose, not as spare cash waiting to be spent. The moment money hits my account, I decide where it goes based on strategy, not emotion. If I don't assign it a role, it will default to consumption. And consumption, when it's not controlled, slowly erodes my ability to build wealth. This is where most people lose the game without realizing it. They earn, they feel secure, and they relax their discipline. Money sits idle or gets spent on things that produce no return. The cause is a lack of intentional allocation. The effect is stagnation. No growth, no compounding, no progress. Time passes, effort continues, but the financial position stays flat. I don't allow that. I give every dollar a clear job. Some dollars are assigned to protection. That means reserves, liquidity, and safety. Some are assigned to growth. That means investments that generate cash flow or appreciate over time. And some are assigned to calculated risk, where the upside justifies the exposure. But nothing sits without purpose. Thinking like an owner changes how I see money. Owners don't ask, what can I buy? They ask, what can this produce? That shift alone filters out most bad decisions. If a dollar cannot reasonably generate a return, I question why I'm deploying it at all. That's how I avoid building a life full of liabilities that drain resources instead of assets that build them. Cause and effect becomes very clear over time. If I repeatedly allocate money into assets, I create income streams. Those income streams reduce dependence on active work. That gives me leverage. On the other hand, if I repeatedly allocate money into liabilities, I increase my financial pressure. More expenses, more dependence, more stress. The behavior compounds and so does the outcome. Protecting capital is non-negotiable. I don't chase returns at the expense of stability. Before I invest, I evaluate risk. What is the downside? How much can I lose? Does this decision expose me to unnecessary damage? If the risk is not controlled, I walk away. Because once capital is lost, it takes time and effort to rebuild. Preservation comes first, growth comes second. Then I focus on cash flow. Cash flow is what keeps the system alive. It's what allows me to reinvest without constantly injecting new effort. If my money is working, I'm no longer the only engine producing income. That's the transition from labor to leverage. And that transition is what creates long-term financial freedom. Poor habits work in reverse. If I ignore allocation, if I spend based on impulse, if I avoid thinking about where my money goes, I create leakage. Small amounts repeated over time turn into large losses. That's how people stay stuck. Not by one big mistake, but by hundreds of small, undisciplined decisions. I take full accountability for every dollar. If it grows, it's because I deployed it correctly. If it disappears, it's because I failed to control it. That mindset forces better decisions. It forces me to slow down, evaluate, and act with intention. At the end of the day, money without direction is wasted potential. I give it structure, I give it purpose, and I make it produce. That's how I turn income into wealth. Avoiding risk does not make me safe. It makes me stagnant. If I refuse to take any risk, my money sits still, loses purchasing power, and never compounds. The cause is fear disguised as caution. The effect is slow financial decline. On the other side, taking risk without understanding it is just as dangerous. That's how capital gets destroyed. So I don't run from risk and I don't chase it blindly. I measure it, control it, and only accept it when the reward justifies the exposure. Every financial decision I make starts with one principle: protect capital first. If I lose my base, I lose my ability to play the game. That's the mistake most people make. They focus on upside before they understand downside. They get excited by potential returns and ignore the probability of loss. That's not investing. That's speculation driven by emotion. And emotional decisions, repeated over time, lead to predictable outcomes: losses, frustration, and hesitation to act in the future. I think like an owner. Owners don't gamble with resources. They allocate capital with intention. Before I commit money, I ask clear, practical questions. What is the worst-case scenario? Can I absorb that loss without damaging my overall position? What are the realistic returns, not the optimistic ones? If the downside is too high or unclear, I walk away. Discipline is not about taking every opportunity. It's about rejecting most of them. Cause and effect is direct here. If I consistently take uncalculated risks, I create volatility in my financial life. One bad decision can wipe out months or years of progress. That instability forces me back into recovery mode instead of growth mode. But if I consistently take calculated risks where the downside is limited and the upside is meaningful, I create steady progress. Over time, those decisions stack and build momentum. I also focus on cash flow when evaluating risk. An investment that generates consistent income gives me a margin of safety. Even if growth is slow, cash flow provides stability and allows me to reinvest. That reduces reliance on perfect timing or market conditions. It puts control back in my hands. Assets that produce nothing and depend only on future price increases carry higher risk. If the market shifts, I'm exposed. So I prioritize assets that work, not assets that hope. Building assets instead of liabilities is another layer of risk control. Liabilities increase my fixed obligations. They reduce flexibility and increase pressure. When pressure rises, decision quality drops. That's when people make desperate moves and take bad risks. Assets do the opposite. They strengthen my position, increase options, and allow me to act from a place of control rather than urgency. Repeated habits define outcomes. If I chase trends, follow hype, and ignore fundamentals, I train myself to react instead of think. That pattern leads to losses. But if I slow down, analyze, and act based on data and logic, I build a system that produces consistent results. It's not about being right every time. It's about managing risk so that when I'm wrong, I survive, and when I'm right, I win meaningfully. Personal accountability is critical. If I lose money, I don't blame the market. I look at my process. Did I ignore the downside? Did I act on emotion? Did I skip due diligence? Every mistake is feedback. And that feedback improves my decision making if I choose to learn from it. In the end, risk is a tool. Used correctly, it builds wealth. Used carelessly, it destroys it. I don't avoid it. I control it. People get distracted by ideas, trends, and big promises. None of that matters if it does not produce consistent cash flow. I focus on one thing first. Does this put money in my pocket on a regular basis? If the answer is no, I treat it with caution. Excitement is not a strategy. Hype does not pay bills. And chasing what feels good instead of what produces results is one of the fastest ways to stay broke. The cause is emotional decision making. People hear about fast growth, big wins, and overnight success, and they rush in without understanding the fundamentals. The effect is predictable. They tie up capital in assets that do not generate income, hoping that someday the value will increase. When it doesn't, or when timing works against them, they're stuck. No cash flow, no flexibility, and no control. I think like an owner. Owners care about income, not just potential. If I own something, it needs to justify its existence. It needs to produce. That's why I prioritize assets that generate consistent returns. Cash flow gives me options. It allows me to reinvest, to scale, and to survive downturns without panic. Without cash flow, I'm dependent on external conditions going my way. That's not control. That's exposure. Protecting capital is directly tied to this. When I invest in cash flowing assets, I reduce risk. Even if growth is slow, I'm still getting paid. That income acts as a buffer. It allows me to recover, adjust, and continue building. On the other hand, when I invest based on excitement alone, I increase risk. If the expected growth doesn't happen, I have nothing to fall back on. That's how capital gets trapped and eventually is lost. Cause and effect plays out over time. If I consistently choose assets that generate income, I build a system where money flows in regularly. That flow can be redirected into new opportunities, compounding my growth. Over years, that creates financial independence because my income is no longer tied only to my effort. But if I consistently chase non-producing assets, I create gaps. I work, I earn, I invest, but nothing comes back. That cycle leads to frustration and stagnation. Evaluating risk before reward becomes clearer when I focus on cash flow. I ask myself, how long can I hold this if things don't go as planned? If there's no income coming in, the answer is usually not long. That pressure forces bad decisions. People sell at the wrong time, cut losses out of fear, or double down out of desperation. Cash flow removes that pressure. It gives me time, and time improves decision quality. Building assets instead of liabilities is another layer of discipline. A liability takes money out of my pocket every month. It increases pressure and reduces flexibility. An asset, especially one that produces cash flow, does the opposite. It strengthens my position and expands my options. Over time, the difference between owning income-producing assets and carrying liability becomes massive. One builds freedom. The other builds dependency. Making money work for me is not a slogan, it's a system. If my money is not generating income, it's not working. And if it's not working, I'm forced to work more to compensate. That's the trap. Endless effort with limited progress. I break that cycle by focusing on assets that pay me consistently and predictably. Personal accountability is what ties it all together. If I chase excitement and lose money, that's on me. If I ignore cash flow and get stuck, that's my decision. So I stay disciplined. I stay focused on what produces, not what impresses. In the end, income beats hype. Cash flow builds control. And control builds wealth. Blaming the market, the economy, or bad luck keeps me stuck. Every financial result I have is tied to a decision I made or avoided. That's the starting point. If I don't take ownership of outcomes, I give up control of improvement. The cause of most financial failure is not lack of opportunity. It's lack of accountability. And the effect is repetition of the same bad habits year after year with the same disappointing results. When I think like an owner, everything changes. Owners don't hide from numbers. They face them. If something is losing money, I don't justify it. I cut it. If something is working, I double down. That level of clarity only comes when I accept that every dollar gained or lost is connected to my judgment. That mindset forces discipline. It forces me to track where my money goes, how it performs, and what needs to change. Cause and effect becomes very sharp here. If I ignore my finances, I lose control. Small inefficiencies turn into large losses. Expenses creep up. Returns go unchecked. Opportunities are missed. Over time, that neglect compounds into financial pressure and limited options. But if I stay accountable, if I review decisions regularly, I create awareness. Awareness leads to better choices. Better choices lead to stronger outcomes. Protecting capital starts with accountability. If I don't know where my money is or how it's being used, I can't protect it. I make it a rule to understand every allocation. Why is it there? What is it producing? What is the risk? If something doesn't meet my standards, I act. Delay is expensive. The longer I tolerate weak decisions, the more they cost me. Evaluating risk before reward also depends on accountability. If I've made poor risk decisions in the past, I study them. I don't ignore them. I look at what I missed, what I assumed, and what I failed to verify. That process sharpens my thinking. It reduces future mistakes. Without that reflection, I repeat errors. And repeated errors destroy wealth faster than anything else. Cash flow is another area where accountability shows up. If my assets are not producing, I don't pretend they will someday. I measure performance. If an asset fails to generate income or demonstrate strong potential, I reallocate. Capital must move to where it is treated best. That's how I make money work for me. Not by hoping, but by managing, building assets instead of liabilities also comes down to responsibility. Every purchase I make either strengthens my position or weakens it. If I choose liabilities that drain cash, I increase pressure on myself. That pressure leads to rushed decisions and poor risk-taking. But if I consistently choose assets, I build stability. That stability gives me the freedom to think clearly and act strategically. Repeated habits define the trajectory. If I make excuses, I stay the same. If I take responsibility, I improve. Over time, that difference compounds. It shows up in stronger financial positions, better opportunities, and greater control over my life. Wealth is not built by one big decision. It's built by hundreds of small, accountable ones. I don't wait for perfect conditions. I focus on execution. I track results, adjust quickly, and stay disciplined. If something works, I scale it. If it fails, I learn and move on without hesitation. That's how I maintain momentum. At the end of the day, accountability is leverage. It sharpens decisions, protects capital, and accelerates growth. I own the outcomes, and I improve the inputs. If you're serious about changing your financial future, then stop waiting and start operating differently. Today, not someday, take control of your money with intent. Decide what percentage you keep. Decide where every dollar goes. Decide what qualifies as an asset and what gets eliminated as a liability. Don't guess, define it. Because if you don't set the rules, your habits will set them for you, and your habits don't care about your long-term wealth. Audit your current position. Look at your income, your expenses, and your investments with honesty. What is producing cash flow? What is draining it? Cut what weakens you. Reinforce what strengthens you. That single action creates immediate clarity, and clarity drives better decisions. Start building a system. Profit comes first. Capital gets protected. Money gets deployed with purpose. Every decision runs through one filter. Does this move me closer to financial control or further away from it? If it doesn't serve the objective, it doesn't get funded. Take one disciplined action now. Not 10, not next week. Today. Move money into an asset. Eliminate a useless expense. Set a fixed profit rule. Small actions executed consistently create momentum. Momentum compounds into results. No more excuses. No more emotional decisions. No more hoping things will work out. Take control. Deploy capital. Build assets. Stay disciplined.